Good morning, everyone. Welcome to the market opening bell for Tuesday, 25th November 2025, your 10-minute guide to the stock market. Hong Kong stocks staged a powerful rebound yesterday. The Hang Seng Index opened 232 points higher and kept climbing, at one point gaining as much as 550 points to touch 25,770. It finally closed up 496 points or 2% at 25,716. The X-share index rose 159 points or 1.8% to 9,079, while the Hang Seng Tech Index jumped 150 points or 2.8% to 5,545. Total market turnover reached 302.6 billion Hong Kong dollars, with Southbound Stock Connect recording a net inflow of 8.57 billion dollars. Southbound money was heavily concentrated. Alibaba attracted 4.07 billion of net buying, Tencent 1.17 billion, Kuaishou 818 million, Xiaomi 484 million, and Meituan 439 million. On the selling side, the biggest net outflows were from SMIC, totaling 1.02 billion, CNOOC 379 million, and Hua Hong Semiconductor 337 million. Notably, Southbound funds have now bought Alibaba for 8 consecutive days, totaling $17.39 billion, and Tencent for 3 straight days, totaling $2.99 billion, while selling SMIC for 3 days in a row, totaling $1.23 billion. Technically, the Hang Seng Index has reclaimed its 100-day moving average at 25,655 and filled last Friday's downside gap between 25,692 and 25,483. Whether it can hold above the 100-day line remains to be seen. The next upside resistance sits at 26,050, with support on any pullback around 25,480. In mainland China, the major indexes were choppy. They opened higher, retreated in the morning, then recovered in the afternoon. The Shanghai Composite ended basically flat, up just 1 point or 0.05% at 3,836. The Shenzhen Component rose 47 points or 0.4% to 12,585, and the Chinex gained 8 points or 0.3% to 2,929. Combined turnover in Shanghai and Shenzhen was 1.7255 trillion yuan. The renminbi midpoint was set 28 pips stronger at 7.0847 against the dollar. On the news front, reports suggest China is studying flash property support measures, including mortgage subsidies, higher personal income tax rebates for home buyers, and lower transaction costs. With property data still weak, more stimulus is widely expected. However, even if these measures materialize, they won't fix the core problem: pessimistic home price expectations. A real turnaround will only come when prices stop falling and buyer confidence returns. The next major policy window is likely the Politburo meeting at the end of November or December, or the Central Economic Work Conference. The Hang Seng Index's quarterly review brought some changes. Innovant Biologics will join the Blue Chip Index and the X-share Index, and its share rose 5.4%. Hongqiao and Yum China were added to the X-share Index, while Leap Motor joined the Tech Index and surged 5.8%. On the way out, ASMPT, New Oriental, Haidilao, and ENN Energy saw mixed reactions. Alibaba will release its fiscal second quarter results ended 30 September after the Hong Kong close today. Consensus expects low single-digit revenue growth, but a sharp drop in profit, dragged down by huge spending on AI infrastructure and instant retail initiatives. Weak consumption, fierce competition from Pinduoduo and Douyin, and US-China trade uncertainty are the main headwinds, though cloud and AI businesses are forecast to shine with 20 to 30% growth. Separately, Alibaba's AI assistant app, Tongyi Tianwen, has already surpassed 10 million downloads in its first week of open beta, the fastest growing AI app in history. beating ChatGPT, Sora, and DeepSeek. News at the White House is discussing allowing NVIDIA to sell H200 chips to China, sent domestic chip stocks lower. SMIC fell 1.1%, while Hua Hong Semiconductor dropped 4.9%. GAC Group rocketed 12% after revealing on its investor platform that it has launched a full lineup of embodied intelligence robots, including the second-generation wheeled-legged Go-Move, the surface robot Go-Sight, the third-generation humanoid Go-Mate, and the mini Go-Mate Mini. Pilot applications in elderly care and security began in the first half of the year. The company plans to establish the world's first embodied intelligence humanoid robot demonstration zone in Guangzhou this year, complete business model verification in 2026, and start mass production in 2027, targeting over 1 billion yuan in robot-related revenue by 2030. That said, the project is still in the early R&D and demonstration phase and will weigh on 2025 earnings through an additional 3 to 4 billion yuan in capital expenditure. On the macro fronts, the leaders of China and the United States spoke by phone again. The US is considering easing export controls on advanced AI chips, and President Trump said he will visit China in April next year. Markets are hopeful for further thawing in trade relations, adding to the positive mood. Fed Governor Christopher Waller, a contender to be the next Fed chair, signaled support for a December rate cut. U.S. stocks rally for a second straight day, with tech leading the charge. The VIX fear gauge plunged 12.4% to 20.52. The Dow rose 202 points, or 0.4%, to 46,448. The S&P 500 gained 102 points, or 1.55%, to 6,705. And the Nasdaq soared 598 points, or 2.7%, to 22,872, its best day since 12 May. The Nasdaq Golden Dragon China Index jumped 2.8% to 7,726, with Alibaba's ADR up 5.2% and Baidu up 7.4%. Among the Magnificent Seven, Alphabet surged more than 6% to a new record. NVIDIA rose 2.5% amid the H200 news. Broadcom soared 11% and AMD gained 5.7%. Tesla was up as much as 10% intraday on reports later denied that full self-driving would be approved in the Netherlands, closing up nearly 7%. Amazon rose 2.5% after announcing up to $50 billion of investment to expand AI and supercomputing capacity for U.S. government clients starting in 2026. That wraps up today's update. By the way, Phillips Securities currently offers bond trading commissions as low as 0.1% of the transaction value, with zero custody fees and zero redemption fees on matured bonds. Existing Phillips clients need to register as professional investors to trade bonds, except U.S. Treasuries and Hong Kong government bonds. Our stock pick today is BEONE Medicines, stock code 6160. BEONE Medicines delivered another strong third quarter performance in 2025, with total revenue reaching $1.4 billion, up 41% year on year. Global sales of Brukinsa hit $1 billion, a 51% increase. The United States remained the group's largest market, contributing $743 million in product revenue versus $504 million in the same period last year. Growth was also supported by sales of in-licensed products from Amgen and Temvinbra, which recorded Q3 sales of $191 million, up 17% year on year. In the United States, Brukinsa generated $739 million in Q3 sales, up 47%, driven by robust demand across all approved indications and modest net price tailwinds. In Europe, Brukinsa sales reached $163 million, surging 68%, thanks to continued market share gains in all major European countries, including Germany, Italy, Spain, France, and the United Kingdom. Thanks to its differentiated best-in-class clinical profile, Brukinsa has become the global revenue leader among BTK inhibitors. This leadership is underpinned by long-term efficacy and safety data, as well as a growing body of clinical evidence that continues to validate the scientific hypothesis of sustained BTK target inhibition. At the same time, BEONE Medicines is advancing its late-stage hematology-oncology pipeline, including sonrotoclax, which has shown striking clinical efficacy and has the potential to become a best-in-class BCL2 inhibitor, and the BTK CDAC BGB16673. These two candidates further strengthen the group's leading position in B-cell malignancies such as CLL. For Q3 2025, GAAP net profit stood at $125 million, an improvement of $246 million from the net loss reported in the same quarter last year, primarily driven by revenue growth and operating leverage. Gross margin on global product revenue under GAAP was 85.9%, up from 82.8% a year earlier, mainly due to a higher proportion of Brukinsa in the overall product mix and improved manufacturing efficiency for both Brukinsa and Tevimbra. On an adjusted basis, excluding depreciation and amortization, Q3 product gross margin rose to 86.3% from 84.9% a year ago. BEONE Medicines has maintained its full year 2025 total revenue guidance as $5.1 to $5.3 billion, supported by Brukinsa's leadership in the United States and ongoing expansion in Europe and other key global markets. Thanks to an improved product mix and higher production efficiency, gross margin for the full year is expected to remain in the mid to high range of 80 to 90%. Technically, the share price has recently pulled back from the high of 229.4 Hong Kong dollars and has fallen below the 10-day moving average. It may test the 20-day moving average near 208 Hong Kong dollars in the near term. An upside gap formed on 12 November remains between $198.9 and $202. A dip toward the $200 level can be considered a buying opportunity with a target of $220 and a stop loss at $190. I do not hold the above stock.